Hello everyone. Today in this video, we will discuss why accounting skills are so important for entrepreneurs. Accounting is not only essential for large business, but it plays an important role for small and medium sized business. It is very hard to imagine business without accounting. It is the language of business and backbone of any organization. Imagine a boat without any compass. You may not know where you are going. Accounting is just like a compass for a business. Without it, you may not be able to know the way your business is performing. You will not be able to know your business is making a profit or incurring loss. So eventually, your business will lose track of it. Then we should know what is accounting. So accounting the process of recording financial transactions relating to business, which includes summarizing, analyzing and reporting these transactions to oversight agencies, regulators and tax collection entities. So we should know what is financial transaction. Any exchange of goods and service between two or more persons or parties or firms for money or money's worth. So financial transaction includes an activity or event and which must be measured or expressed in terms of money and should have an impact on the business financial position. Why is accounting important in business? So accounting keeps you organized, it backs up your tax return, it holds you accountable, it guides you to make decision. You can measure new strategies. You need it to get investment or loan. Without accounting, you are in trouble. Then, so businessmen should be acquainted with 5 elements of financial statements. They are assets, liabilities, equity, expenses and revenue. Expenses and revenues are two key elements in income statement, whereas assets, liability and equity are three key elements of balance sheets. Then we should know what is asset. An asset is a resource controlled by an entity as a result of past events and from which future benefit is expected. So assets are things value owned. Either you are the owner of this asset because of you owned it or it is on lease basis. And from that asset only we will get benefit in future. Examples are cash in hand, cash at bank, sundry debtor, bills receivable, certain investment, land and building, plant and machinery, furnitures, goodwill, patents, copyrights, etc. Then, what is liability? A present obligation of the entity to transfer an accounting resource as a result of past events. That means suppose previously you have availed any loan for the business. You have to repay the EMI, that is installment. So that is your liability. Amount the business owed to the outsider is known as liability, or it is otherwise known as it is the claim of outsiders on total assets of the business. Then what is capital? So capital means anything brought by the owner into the business, either in cash or in kinds. So capital, the term capital is used for sole proprietorship business, partnership business, but the term equity is used in case of company, because in case of company the shareholders are the owners of the company. Then what is revenue? It is the gross flow of cash. Receivable means suppose you sold goods on credit basis. The person to whom you sold goods on credit basis are your debtor, or any other consideration arising in the course of ordinary activity of the business. Then expenses, it is the cost of operation that a company incurs to generate revenue from which no future benefit is expected, means its benefit is exhausted within the same financial year. Examples are salary, fees, rent, stationery, maintenance. Then the revenue. Then in business, internal stakeholders there and outside stakeholders are there. That is external stakeholder. Internal stakeholders are people within your organization. Examples are board of directors, partners, managers, officers. Then external stakeholders are people outside the organization. That is investors, lenders, suppliers, customers, governments. Then what is the usefulness of financial accounting to stakeholder? So accounting provides answer to the following questions of stakeholders. Is business is running at a profit or not? Are credit customers are paying in time or not? Whether business is timely meeting its obligations or not? Is cash flow of a business is adequate or not? Whether business is meeting its statutory compliance like filing GST, income tax return in time or not? What is the financial portion of the business at the end of the year? So, in this video, tips to businessmen are: businessman has to maintain a separate bank account. Secondly, they should have a track on every expenses, and they should choose an appropriate accounting software. Then every businessman should monitor his variable expenses. And businessmen have to plan their taxes and ensure that taxes are paid in time. Then they should reconcile the bank, vendors and customers account. They should maintain a proper record of stock or inventory. Last but not the least, they should establish unsound internal control system in the organization. Thank you.